Special Purpose Acquisition Companies, or SPACs, have taken Wall Street by storm. And for many, it's become like the Wild West, a good old-fashioned money grab where elite insiders make big money as individual investors take all the risk. Now, conversely, as a critic of the current system that sees these great companies change hands privately for a decade or more even before the individual investor gets a shot, that's also a major disappointment. So, listen, the same old Wall Street folks, Silicon Valley elites, they're always making money. They're guaranteed billions when the Ubers of the world go public. So this is just one of the reasons I've only played SPACs as trading ideas. But this morning's developments underscore another reason. Churchill Capital provides a great example on why SPACs carry many inherited risk and complexities that are beyond the experience of many and most individual investors. In fact, yesterday, my wife went to see a new foot doctor, and while she was there, I don't know, somehow they began to talk about the stock market, and he was extremely excited about Churchill Capital. So my wife sends me an email, and the subject line is just a bunch of question marks with a photograph of Churchill Capital. My reply: we closed it out. I'm spying a couple of penny stocks. I mean, this was sort of to assuage her eagerness to be in something new and undiscovered that she thinks will soon get hot. Now, here's the thing, of course. Churchill was already hot, and everyone already knew the rumor. The second oldest axiom on Wall Street: sell the news. And that was true, of course, this morning with Churchill, but more so because this long-rumored deal saw new investors buying this stock at $15. I didn't see that coming. So how do you play in this SPAC space? SPAC space, say that quickly. Hey, let's bring in the Director of Options at Simpler Trading, Danielle Shay. Danielle, first of all, were you ever long this Churchill?
No, I was not.
Okay, SPACs, there's a dozen of them a day, and some have been amazing. I've done extraordinarily well in the DraftKings of the world and the Virgin Airlines of the world. But how do you go about, how does someone know when to buy, when to hold these things? Because there's no real roadmap for them.
No, there's really no real roadmap, Charles. And I mean, we cannot look at the fundamentals. I mean, 2025 earnings, that's just, it's so far away at this point. We just can't look at those numbers. For me, what I tell my clients is you just have to look at something that's unique in the field. It has to be a disruptor, okay? So not only does the company have to be unique and it has to be one of the first companies in the space, but it has to be a disruptor. It has to be something new like DraftKings. And then the third point is you really want a company that is being brought forward by somebody with experience. You want, the executives of the company to have a lot of experience, and you want the person bringing forth the SPAC to have a lot of experience as well.
Right, right. Yeah, that's a great point you bring up. We're getting more and more celebrities in this thing. And I mean, listen, we're at the height of celebrityism and elitism and materialism. Maybe that works, but for an investor, if you're going to go with the idea that these companies are going to disrupt entire industries, they better know how to do it. And it can't be, not dissing anyone, but you can't be a baseball player and tell me you're going to disrupt some other industry. But you have invested in some SPACs very successfully. So can you share 3 names that you like right now?
Yes, I mean, personally, I like Open Door. I think that this is a disruptor in the field. I mean, house flipping is huge right now. You have a real estate market that's just absolutely on fire. I also like 23andMe. I think that that was really the first company that was, in this space. And I think that's going to be an area that's going to continue to grow. And I also really like Richard Branson. I mean, he's amazing. He's successfully brought many other companies public, and I think that he's going to do a great job with this one. The third one that I like is Sophie, and the reason for that is because, I mean, we've talked about this one, right, Charles? I mean, you like this one too, don't you?
Yeah, I do. I mean, listen, by the way, all the names you're bringing up, you have solid background reasons for liking them. What happens, though, if they take off and they're up 400, 500, 600%, and everyone starts to talk about them? Do you say, I'll ride the wave anyway, or is there some point where you get just a little anxious when everyone jumps on the bandwagon?
So yeah, I definitely do get anxious when everyone jumps on the bandwagon. What my strategy is I like to take out a position, okay? And then I like to dictate, okay, this % of this position is going to be my long-term hold, and I'm going to hold that for 5 or 10 years. And if it goes 400%, to the upside, I'm still going to keep it. But the other half of my position, I'm going to sell it and take it off as a trade. So that's the way that I've been managing all of these recent IPOs and SPACs, because I do want that long-term potential, but I mean, I could not ignore the fact that they have made for great trades.
Danielle, that is absolutely fantastic, actionable advice that people need, okay? We can throw out a whole bunch of hot symbols, but that's something I think everyone, I hope they wrote it all down. Thank you very much. We'll talk to you again real soon.